The silver market just became officially unstable. Volatility has exceeded 100%. Let me tell you what that actually means. It means the price is now swinging so violently that it can literally double or get cut in half within hours. It means the market has transformed into a chaotic, unpredictable bomb that could detonate at any moment. And right now, thousands of amateur traders are glued to their screens, desperately trying to guess the bottom. Is it $70? Is it $50? Maybe $30? They're all asking the completely wrong question, and they're all about to get absolutely wiped out. Because here's the truth nobody's telling you. The real bottom isn't a price level you can find on a chart. The real bottom is an event, a single specific moment that will trigger a price explosion so violent and so sudden, it will shock even the most experienced traders. In this video, I'm going to show you the data that proves the old silver market is already dead. I'll expose the two fake bottoms that are traps designed to destroy your wealth. And I will reveal the one critical event that marks the true, shocking bottom, and why missing it could be the most expensive mistake of your life. This isn't theory. This is happening right now. Let's go. So what does on 100% volatility actually mean in practical terms? Let me give you a simple analogy. Imagine you're driving a car down the highway and suddenly the steering wheel becomes completely loose. The car starts swerving violently left and right with even the slightest touch. You've lost all control. That's 100% volatility. It means the stabilizers are gone. The market makers have abandoned ship. In normal markets, there are stabilizers called market makers and liquidity providers. These are the big banks and institutional players who stand ready to buy when everyone's selling and sell when everyone's buying. They create what's called two-sided liquidity. They keep the market orderly and predictable. When volatility hits 100%, it's proof that these players have stepped away. They've pulled their bids. They've removed their liquidity. The big institutions have left the building. And here's the terrifying part. They don't leave randomly. They leave because they know something catastrophic is coming. What this tells us. This extreme volatility isn't just a technical indicator, it's a warning signal. It's telling you that the sophisticated players, the ones with billion-dollar risk management systems and teams of PhDs analyzing every data point, have decided this market is too dangerous even for them. They've abandoned the retail investors to deal with this unstable bomb alone. The breakdown in price discovery. When market makers leave, something critical breaks: price discovery. In a normal market, price moves gradually as buyers and sellers negotiate. Supply meets demand at rational levels. But in a market with 100% volatility, there's no negotiation. There's only panic and chaos. Prices can gap up or down by 20%, 30%, even 50% with no warning, because there's nobody standing in between to smooth out the moves. This is not a market anymore. This is a demolition. So when the market is this unstable, where exactly is the bottom? Most people will point you to two specific levels, and both of them are traps that could destroy everything you have. Let me show you these two deadly traps right now. Before we can identify the real bottom, you need to understand the two most dangerous lies being spread right now. These are traps designed to make you think you're buying at the bottom when you're actually catching a falling knife. Trap number one, the technical analysis trap. Right now, chart analysts are flooding social media with their predictions. They're drawing lines on charts and saying things like, silver has strong support at $65. That's the 200-week moving average. That's where institutions will step in. Or, we're seeing a bullish divergence on the RSI. The bottom is clearly at $58. Here's the brutal truth. All of that is completely worthless now. Technical analysis works in normal markets where human psychology and historical patterns repeat. But we are not in a normal market anymore. We are in a systemic breakdown. When volatility exceeds 100%, historical support levels mean nothing. Moving averages mean nothing. Fibonacci retracements mean nothing. Those tools were designed for a functioning market with active market makers and orderly price discovery. That market is dead. Relying on chart patterns right now is financial suicide. Trap. Number two, the recessionary demand trap. The second trap comes from the fundamental analysts. They're saying a major recession is coming. Industrial demand for silver will collapse. The price will fall back to the cost of production, around $25, $30 per ounce. That's the real bottom. This sounds logical, but it's based on 20th century thinking that no longer applies. Here's why they're wrong. Silver demand today is fundamentally different than it was 20 or 30 years ago. It's become what economists call inelastic. Let me explain what that means. Why demand can't collapse. The Pentagon needs silver for missile guidance systems and advanced radar. That demand doesn't disappear in a recession. If anything, it increases during geopolitical instability. The solar energy industry needs silver for photovoltaic cells. Governments have mandated renewable energy targets. Those mandates don't get canceled because of a recession. The AI and semiconductor industry needs silver for advanced chip manufacturing. Tech companies will pay whatever it takes because without silver, their entire production line stops. This isn't luxury demand that evaporates when the economy slows. This is mission-critical, non-negotiable demand. Waiting for silver to fall to $25 because of reduced industrial demand is like waiting for a train that will never arrive. Both bottoms are illusions. The technical bottom and the recessionary bottom are both lies designed to keep you waiting, paralyzed, while the real event unfolds without you. So if the charts are lying and demand won't collapse, where's the actual bottom? The answer isn't on your screen. It's hidden in a specific inventory report that 99% of people are completely ignoring. And that report is telling a story right now that will change everything. Let me show you. This is the chart that actually matters. This is the COMEX registered silver inventory. This represents the physical silver that is actually available for delivery to settle futures contracts. And it's draining at an alarming rate. The numbers are shocking. 18 months ago, COMEX had 250 million ounces of registered silver in its vaults. Today, that number has collapsed to approximately 25 million ounces. That's a 90% decline in available physical inventory. And it's still falling. Every single week, more metal is being withdrawn and shipped out to private vaults where it's no longer available for delivery. Understanding what this means. Now here's what you need to understand. The real bottom isn't a price of $50 or $30 or any number on a chart. The real bottom is the exact moment this inventory number hits 0. That's the day COMEX will officially be unable to deliver physical silver to contract holders who demand it. That's the day the paper market dies. The death of paper silver. Think about what happens at that moment. COMEX is where the global price of silver is set. It's where banks, funds, and institutions trade silver futures contracts, paper promises to deliver metal in the future. But what happens when those promises can't be kept? What happens when someone demands delivery and COMEX has to say, we don't have it? The entire paper market collapses instantly. Every silver ETF that claims to be backed by physical metal, like SLV, becomes worthless because they rely on COMEX pricing and COMEX inventory to function. The price disconnect. And here's the part that will shock you. On that day, the paper price doesn't go to $50. The paper price goes to 0. But the physical price, the price of actual metal you can hold in your hand, that price resets to a level that will absolutely blow your mind. Because when the paper market dies, price is no longer determined by traders and speculators. It's determined by desperate buyers who need the metal to survive. Let me show you what that looks like. So when I say the real bottom will shock everyone, here's exactly what I mean. On the day COMEX defaults, the price of silver won't fall. It will explode. Why the price will explode? Think about who needs silver when the paper market is gone. Apple needs silver to manufacture iPhones. Samsung needs it for their electronics. Tesla needs it for electric vehicles. The Pentagon needs it for defense systems. When the COMEX exchange can no longer deliver, these companies have to go directly into the physical market. And they're not price sensitive. They're survival focused. Imagine Tim Cook calling his procurement team and saying, I need 1 million ounces of silver this month, or we shut down iPhone production. I don't care what it costs. What price would Apple pay? $150 per ounce. $250? $500? The answer is whatever it takes. Because for Apple, not having silver means billions in lost revenue. Paying $500 per ounce is cheap compared to shutting down production. Multiple desperate buyers. Now multiply that scenario across every major tech company, every automaker, every solar manufacturer, and every government defense contractor. They all show up to the physical market at the same time, bidding against each other for the limited supply that exists outside of COMEX. This isn't speculation. This is basic supply and demand math when the normal pricing mechanism breaks. The shocking timeline. The shock isn't that silver might eventually reach $200 or $300. The shock is that it happens in days, not months or years. 1 week, silver is trading at $75 with people waiting for it to fall to $50. The next week, COMEX announces it can't fulfill deliveries, and the physical price is suddenly $250 with no metal available at any lower price. And 99% of investors will miss it entirely because they were staring at charts waiting for a bottom that never came. The bitter irony. The people who sold in panic at $75 waiting to buy back at $50 will watch in horror as the price skips right past $100, $150, $200 without ever giving them a chance to re-enter. The bottom they were waiting for becomes the launch pad for the most violent price spike in commodity history. But here's the final piece you need to understand. Even in this new world where silver trades at 200 plus, there's one more massive threat. The government will not let you get that rich without taking their cut. And they have a specific tool to do it. It's called the Windfall Profit Tax. Let me explain what's coming. So, in this chaos, what's your actual plan? Let me give you the 3-step protocol to survive and profit from what's coming. Step number 1, stop looking for a price. Bottom. Abandon the idea of timing the perfect entry based on price. Instead, watch the one number that actually matters. COMEX registered inventory. Check it every week. The data is publicly available on the CME Group website. The moment that inventory drops below 20 million ounces, understand that the end game is very close. When it hits 15 million, the system is in critical condition. When it approaches 10 million, the default could happen at any moment. This is your real signal, not a price chart, not technical indicators, the physical inventory number. Step number 2, accumulate physical, ignore volatility. In this environment of extreme volatility, paper assets are deadly. Silver ETFs can be frozen, suspended, or restructured overnight. Mining stocks can go bankrupt. Futures contracts can be cash settled instead of physically delivered. Only physical silver in your possession is safe. And here's the critical mindset shift. Stop checking the dollar price every day. Your goal is to accumulate ounces, not to maximize dollar value. If silver drops to $60, buy more ounces. If it spikes to $90, hold your ounces. The price volatility is noise. The inventory depletion is the signal. Step number 3, prepare for government intervention. When silver prices explode, governments will panic. They'll see people making 300%, 500%, 1000% returns, and they'll want their cut. The most likely intervention is a Windfall Profit Tax, a special tax on extraordinary gains from strategic commodities. Historically, windfall taxes have been as high as 70 to 80% of profits. How to protect yourself? There's one legal strategy that can help. Buy silver products that are classified as collectible or numismatic rather than pure bullion. This includes certain coins like American Silver Eagles, Canadian Maple Leafs, or limited edition commemorative coins. Tax laws often treat collectibles differently than investment commodities. The rules are more complex and favorable in certain jurisdictions. I'm not giving tax advice. You need to consult with a professional in your specific situation. But understand that the type of silver you own could make a massive difference in how much of your gain you actually get to keep. The psychological preparation. Finally, prepare yourself mentally for what's coming. This won't be a smooth, predictable rise. It will be chaotic, terrifying, and filled with moments of doubt. There will be days when silver drops 15% and you'll want to sell. There will be news headlines screaming that the rally is over. There will be experts on TV explaining why silver will crash back to $40. You have to be prepared to ignore all of that noise and trust the one fundamental truth. Physical supply is disappearing. Industrial demand is inelastic. The paper market is dying. Those facts don't change based on daily price moves. Let me bring this all together. The market is desperately trying to make you look in the wrong place. They want you staring at price charts, waiting for a bottom that will never arrive. They want you frozen in analysis paralysis while the real event happens without you. But now you know the truth. The real bottom isn't a price. The real bottom is when supply hits zero. The shock won't be silver falling to $50. The shock will be waking up one morning to discover that COMEX has defaulted, physical silver is trading at $250, and you have no way to acquire it at any reasonable price. Your move. After everything I've shown you in this video, I want to know, what are you watching now? Comment below. Price bottom, if you're still trying to time the chart, or inventory bottom, if you understand what really matters. And if you want to stay ahead of this collapse, subscribe to this channel. Because my next video will expose the 3 specific countries that are preparing most aggressively for the COMEX default. Their moves will show you exactly how the smart sovereign money is positioning right now. The final truth? Stop looking for the floor. Start watching the inventory. The real crash isn't in the price. The real crash is in the supply. And when supply hits zero, the price goes to infinity. Don't wait for that day. Position yourself now while you still can.